Hello and welcome back to another ISTAT Learning Lab. Today we have Tom Crabtree in our studio in Seattle, and he's going to talk about the good times and bad times. It's an overview of the current air cargo market. Tom is a managing director of the Trade and Transport Group, and he joined this outfit in late January this year. It's a small, highly specialized strategy and consulting firm and analytical solutions provider to companies and institutions operating in the global transportation and logistics space. Before TNT, Tom was a regional director, airline market analysis for Boeing in Seattle, a position that he held for over 25 years. And from 2000 to 2020, he was a contributing author and chief editor of the Boeing World Air Cargo Forecast. Tom began his professional career with Boeing in 1991, and while he was there, he held positions in sales support engineering, flight operations engineering, and marketing. And while he was in marketing, he also worked in product analysis and airline economics. Before I hand over to Tom, I just wanted to say that during his presentation, you are welcome to write in questions by clicking the Q&A button at the bottom of your screen. And then to the extent we have time after Tom's presentation, we will go over those questions with Tom, and he will try to answer them to the best of his ability. And with that, I want to hand over to Tom Crabtree.
And thank you, Niels. And let's see here. Okay, this worked during the practice run. How am I doing, Niels?
Well, you need to share your screen and then try to put the presentation in presentation mode. So now at the moment, you're not sharing the screen. Here we go. Yes, this is perfect. Thank you.
Sorry about that. Well, good morning, good afternoon, good evening, wherever you are on the globe. Niels, thanks for that nice introduction. So for those of you who are on a time budget, I've got 25 slides to go through here, including the one you're looking at here. I'm going to start with a bit of an homage because I started my career in aviation working on the 747 platform, and what you're looking at is the very last 747 freighter aircraft ever built and delivered by Boeing Commercial Airplanes. And I wistfully left the company about the same time that airplane delivered to Atlas Air. So this picture was taken in mid-January by myself, and it is one of my cherished heirlooms from my time at Boeing. That aside, as Neil said, I'm with Trade and Transport Group now. As he mentioned, we're a small but highly specialized outfit. We have a broad range of experience. We maintain an extensive database array that caters to not only traffic and trade, but also the capacity needed to serve it, cost, the competitors within those different realms and modes of freight transportation, as well as the economics databases to help our clients plan for the future. So we look at trades and trends across all those different modes, and we've got a growing library of reports, one dedicated to Africa, another dedicated to India, and just this past week, we released our Freighter Market Outlook, which is a very detailed examination of the oncoming delivery stream of known freighter backlog for the next 5 years from this year, 2023, to the end of 2027. So to get right to it, and I have to apologize, I'm not a big fan of bullet slides, and I don't expect you to read all of this, but I want you to take away that traffic is down. See if you can find a nugget in here. The headline does not match with the second bullet down in terms of the decline, and that's because I didn't have time to fact check which number is correct. It doesn't really matter if it's 8% down last year or 7% down. The most important thing is it's in the high single digits, and it will probably change as newer data becomes available throughout 2023. It's expected to keep on declining. We were looking at a contraction of 15% in January globally in air cargo, and a lot of this has to do with the uncertainty that emerged with the Russian-Ukrainian war in early 2022, inflation, the winding down of supply chain disorder, that led to a lot of defection of container ship traffic to air cargo traffic. We expect these declines to continue, but the jury's a bit out because we're kind of starting to see maybe, just maybe, there's more optimism in the back half of 2023 and a potential for positive growth. We need to keep in mind, though, that most air cargo is general freight traffic that caters to manufacturing and industrial activity and global supply chains. But the decline in the express and e-commerce, the slower e-commerce growth needs to be taken in perspective that it was greatly accelerated during the pandemic. And there's been a decline in B2C e-com shipments because people went back to work and actually went back to the shops, which should not have been unexpected. Yields have remained elevated in the air cargo's realm, which is quite different than what we're seeing in the ocean markets. And we saw a weakening in yields throughout 2022, and it looks set to continue into 2023. So let's take a look at the express industry. So we're really grateful that all the big four express carriers, so DHL, FedEx, UPS, and now SF in China, have all released pretty much their 2022 numbers. And not surprisingly, volumes are down across the board with one exception, and that is domestic volumes for China, as catered to by SF Express. Unlike the other carriers, though, SF's yields are essentially flat, if you'll notice that in the lower right-hand corner, whereas everybody else's yields are still fairly strong. Now, some of you who might be on the line, I may have had a conversation with you in the last week or two where we talk about yields still being elevated. There's a bit of nuance here, and that needs to be kept in perspective, is that some of the yield elevation we're still experiencing is probably attributable to elevated fuel surcharges. But it varies across the board by market and by operator. So keep that in mind when people say, well, traffic is up, but traffic is down, but yields are still elevated. So that nugget to take forward that's not actually explicitly written out in the presentation here that I'm sharing with you. Newsflash, we got full year US domestic air cargo traffic data. So this is an area chart that is graphed against the left-hand axis in terms of share of traffic by express, charter, mail, scheduled freight, and the emergence of inventory management systems like those of Amazon. Now, this is quite interesting. The line is the change in traffic over the last 22 years. And we were essentially looking at a very moribund market for the last 2 decades until the stand-up of what was once called Aerosmith, Project Aerosmith, which was a code name for the Amazon air operation in its nascent operational period I believe that was in the 2015 timeframe. And then we saw very strong extrinsic growth where Amazon is now pushing, I think, 80 to 100 aircraft in service in the domestic US market. That led to a nearly 50% increase in the size of the volumes of ton kilometers or the ton kilometer market in the US market from roughly 2015 through 2021. It's unbelievable growth in a market that really had not seen much growth since the late 1990s. It did, however, not surprisingly, decline last year as B2C traffic weakened. Now let's take a look at the international market. So again, markets contracted last year. And I should point out that a lot of the data that we use day to day in the industry, especially that data that's readily accessible, those of us who cannot buy data, comes from IATA. And IATA actually aggregates the traffic of their constituent members. And the numbers that they release in their press release month to month are the ton kilometers of traffic flown by member carriers in their respective domiciles. But it doesn't really break down a geographic concentration unless you look at the region of domicile. What this does is tends to turn it into a regional flow. And this is quite interesting. So you can kind of see, and this is going to be a recurring theme in my talk with you today, is that if you look at the orange line, which is Asia to and from North America, and then the green line, which is Middle East Asia, and then the blue line, which is Europe, Asia, you can kind of see that those markets boomed during the onset of the pandemic. That's where the traffic was. Long story short, developing world markets were denied capacity because a lot of the belly capacity was taken out and the freighters were redirected to serve developed world markets in Europe, North America, and developed Asia. Then the inflationary period set in. The Russia-Ukraine conflict added a whole new dimension of uncertainty to the world political scene as well as its economy. Europe was drastically affected, and you can kind of see that in the dashed line there, that traffic within Europe, intra-East Asia, and Europe-Asia also showed the steepest falls up through the beginning of this year. And in fact, if traffic contracted 8% globally last year in terms of ton kilometers flown, I've seen compilations of work from my former colleagues that Europe saw a contraction of around 16% last year, double that of industry average, followed by the Middle East carriers who are highly dependent on European originating traffic, as well as China originating traffic, which was very hesitant due to the very stringent policies of the People's Republic of China in dealing with the COVID-19 virus until the end of December 2022. So this is the second chart that is heavy on text that I'd like to share with you today. And I want to share a few tidbits on what we've uncovered regarding the Africa market. So it represents about 2.5% of total world air cargo traffic. But what's really interesting is that by the early 2030s, the working age population, defined as people of 15 years of age to 65 years of age, will exceed that of China, and by the late 2030s, that of India. And again, the remaining air transport capacity that was available for cargo or freight transportation, particularly on freighters, was redeployed mostly to developed world markets at the expense of developing world markets. You're going to hear this from me repeatedly today. And while passenger connections are being restored, freighter capacity into and out of Africa still has not been fully restored. The good news is that Africa is one of those bright spots in the world economy, expected to grow 3.8% this year and 4.1% GDP, with some mid-sized African countries exhibiting even stronger growth. And one last point, Africa is characterized by mostly finished goods, higher value merchandise like IT equipment, automobile components, industrial components heading south, whereas it's mostly perishables, including fresh fruits, vegetables, cut flowers, heading north. And so what we are seeing is a slow but inevitable reorientation of African trade patterns, pivoting more towards Asia and less so towards Europe. I'd like to share with you a bubble map of what air cargo traffic, a heat map of sorts, where cargo traffic is concentrated in Europe. And that it's basically in 5 big airports. So it's Cairo, Addis Ababa, Nairobi, Johannesburg, and Lagos. Everything else is fairly much smaller, with maybe the exception of Casablanca. And we still haven't seen a return to pre-COVID traffic levels, or I should say even 2018 levels, because 2019, I need to remind a lot of our listeners today, our viewers today, that 2019 was not a good year for air cargo. And that bar chart in the upper right-hand corner demonstrates that. But we are slowly inching back, and you can kind of see that in this next slide. And this is just for the first 10 months of 2022 relative to the first 10 months of 2021, where most markets on the continent have returned to growth, with the exception of maybe Lagos and Nigeria. Now let's talk about India, another developing world market we've devoted a lot of resources to recently. It's now the world's most populous country, but its domestic and international markets are only basically a fifth the size of that of China. And its economic and trade growth are expected to outperform in the near term, driven by a lot of new imported goods, as well as a very, very small export market of manufactured, both intermediate and final goods, as well as e-commerce. Now, what we're also seeing, and this is kind of an interesting point, is that India could be a beneficiary, like another country like in Southeast Asia, like Vietnam, of big multinationals pivoting away from China, given the events of, I would say, the last 5 to 10 years. But it's relatively small still on a very, very relatively speaking to the China market. Furthermore, we have seen an increase in manufactured goods being moved in and out of India, but exports grew by almost 10%, imports by 17%. But that market is still 2.2 million tons and still below its pre-COVID traffic levels. International traffic still has not recovered, but the domestic market has. Let's take another look at that graphically. Not unlike Africa, it's very concentrated. If you look at the the airports in the lower left-hand corner in this Power BI map. So Delhi and Mumbai, followed by Chennai and Bengaluru, are the probably 75–80% of traffic into and out of the nation state of India. Now, the traffic moves to places like the Middle East, then Asia Pacific, then Europe in the upper left-hand corner, but that belies the actual trading partner, because the Middle East, because of the superconnector airlines in Qatar and the UAE, tend to mask their onward flows to other parts of the world like Europe, North America, and East Asia. Their partner cities, again, you can see that Dubai, Doha in the upper right-hand corner, and again, you can see in the lower right-hand corner that the traffic flows simply have not got back to where they were, say, back in 2018, 2019. And this basically puts it in another perspective, is that the market peaked at about just not quite 2.6 million tons of flow, almost evenly split, but heavily in terms of a very sizable domestic market, international outbound, and then international inbound, bringing up the number 3 spot. Again, keep in mind, though, we are talking a market that's still 1/5 the size of China's, but we believe has considerable runway growth in front of it for expansion over the next 5 to 10 years. Now I'm going to pivot to the world market, and I want to talk a little bit about long-term historical growth. So newsflash, air cargo traffic has been especially volatile since the 2018-2019 timeframe. 2019 was down 3-ish%. We saw another contraction because of the takeout of belly capacity, about a 60% reduction of belly capacity during the first year of COVID in 2020. And that's only just now starting to approach, but we're still seeing a restoration of belly capacity, particularly on routes into and out of East Asia, as I speak to you today. And then we saw a contraction last year of about 7 or 8%, depending on the resource you look at to map traffic. So what does this all mean, though? Well, again, yields remain elevated. And this slide comes to us courtesy of Boeing. And basically, you can kind of see that yields were about $1.77 on average. These are general freight yields. These do not include express traffic. And what you'll see is they were $1.77 in year 2019, and they surged in 2020, and they went even crazier in 2021, and remained elevated throughout most of 2022, but they started to decline mid-year. By the end of the year, yields were down. The year annual average is that number you see there, but the yields were down to about $3.24 US per kilo by the end of the year. Since that time, as of mid-March, another industry resource, not IATA, Cargo S, is reporting that yields hit about $2.73 a kilo as of week number 11. And so that's basically another haircut of 50 cents off a per kilo rate just in the 10-11 weeks since the end of year 2022. So do we anticipate that to continue? Most assuredly so. Do we see a return to pre-COVID levels? Probably not, given the factors that I'll talk about elsewhere in this presentation. Now, the majority of the world's merchandise trade moves in a container like this one, a 40-foot equivalent unit, or FEU, and it carries roughly 9 to 12 metric tons, depending on the commodity it's loaded with. And just to give you some sort of comparison, the world container ship industry moves about 1.8, 1.9 billion tons of goods per year. That's just the container ship sector on the ocean, not including, say, tanker cargo or bulk loaded cargo. By comparison, the air cargo industry at its peak moved about 65 million tons in year 2021. So the scales are dramatically different. What's really interesting about this business is that while yields have gone up roughly 2.5x in the air cargo sphere, During the chaos that ensued during the pandemic, especially in late 2020 and into early 2021. This is a weekly chart brought to us by Drury of London. You can see that the average box rate, which was about $1,400 in year 2019, surged to over $10,000 to move a 40-foot container by September of 2021. Now, we knew that wouldn't last, but it stayed elevated until about the mid-second quarter of last year. And then by the beginning, or I should say, the beginning of third quarter 2022, it started to decline very rapidly and is now down to about $1,750, which one could argue that's roughly pre-COVID levels adjusted for inflation. It depends on your viewpoint and what market you're talking about. Curiously, some markets remain elevated, particularly the transatlantic, which is kind of curious because US inbound demand has remained fairly strong as of late. Now, what do we expect for the future for the air cargo industry? Well, our outlook basically is underpinned by a recovery that begins towards the second half of this year and is really manifesting air cargo numbers by certainly by early 2024. So we expect express growth to resume later this year and air cargo overall next year. And so we've indiced growth out through 2027. Our forecast is for total traffic to expand at 3.5% through 2027, and international express traffic to grow a little bit better than that, 4.5% over the next 5 years. And that's the underpinning of our freighter market outlook, of which I'll share a few tidbits with you later in this discussion. Now let's shift to my favorite topic, and that is freighter aircraft. So basically, we look at the world in small, medium, and large, otherwise known as narrow bodies, which carry up to about 40 metric tons of useful load, medium wide bodies, which carry 40 to 80 metric tons of useful load, and then large wide bodies, which carry 80 metric tons or more. And the first two gauges, narrow bodies and medium wide bodies, are in most cases tools of the express networks, like those operated by DHL, FedEx, UPS, and SF. There are a few exceptions, but one could argue that somewhere between 70 and 80% of the aircraft devoted, the freighter aircraft in service, serve those networks. And roughly 60% of all freighter aircraft actually serve express networks indirectly, regardless of gauge. You see more diversity in terms of the type of customer using freighters in the large wide body sphere, especially what are known as combination carriers. Those are large passenger network airlines, say like Lufthansa, Emirates, Cathay, which fly vast belly networks, oftentimes with cavernous passenger lower hold capacity, especially during normal times, or as the times we're getting back to now as we emerge from the COVID-19 era, where they're augmented with freighter aircraft to basically provide a full service option to their ultimate customer, the shipper. So we took a look using IATA World Air Transport Statistics data, as well as a conveniently released IATA chart of the week about a month ago at the share of air cargo traffic carried by freighters. Pre-COVID, according to IATA, freighters carried somewhere between 53 and 55% of total air cargo traffic, and we expect eventually that number to become the norm again, but maybe not for some time, maybe not till towards the latter part of this current decade. That share of traffic carried by freighters, not surprisingly, peaked at nearly 70%, or right at 70% if you look at a tonnage. So the left-hand graph is just strictly on tonnage, whereas the right-hand graph is looking at the ton kilometer. So it kind of captures not only the tonnage in plane, but the distance flown metric of cargo traffic on an industry scale. And we that share maintained more or less in the high 60s in the latter part of 2022. We do expect it to come down this year, especially as more belly capacity, particularly in East Asia, comes online. So the global freighter fleet interestingly, if you were to look at it, depending on the slice and time, the picture varies quite differently. So it expanded quite rapidly in the first decade of what I call the post-Cold War globalization area from 1990 to roughly 2001. And then it grew mostly via gauge. You can kind of see that the narrow body gauge contracted from over 1,000 units down to about 680 units by year 2013, 2014. But that belied the fact that there was significant upgauging both in medium wide bodies and large wide bodies over that time frame of roughly 1997 to 2018. But if you were to draw the picture right between those 2 years, 1997 and 2017, 2018, it only appeared that the freighter fleet expanded by a whopping 100 units, from roughly 1,700 units to 1,800 units. That's a very, very on the surface of it, it doesn't appear like much growth, but the capacity differential has changed. Now, what it really has done is picked up in terms of unit growth of about 3.5% per year since 2013. And it looks like it's stagnating, but we need to keep in mind that in 2022, the Russia-Ukraine war, in terms of adding a lot of uncertainty and high energy prices, enfeebling the European economy and contributing to a lot of the cargo traffic decline that we saw worldwide in the air freight sector, there was a takeout of considerable capacity with a couple of large wide-body freighter operators. One in particular, Volga-Dnieper Group of Moscow, Russia, which some of you may be aware, was a big operator of 747 freighter capacity between primarily Asia and Europe, but also even in the transatlantic and the trans-Pacific sectors. So the takeout of that particular carrier represents probably arguably somewhere between 1% and 2% of the overall traffic decline in year 2022, simply because that capacity went missing. And that's why you see basically a plateauing of the world freighter fleet in 2021 into 2022. And you can see the relative distribution of shares of narrow body, medium, wide body, and large. Before we go on, I'm going to see if I can get to the question that's been posted already. So Christian asks, have air cargo demand increased with the ocean container ship backlogs during pandemic backlogs, shipping docks and the stoppage in the strait? Any correlation there? I'm going to see if I can interpret this as best I can. To a degree, I would say yes, we did see some correlation with, over time you do see correlation with container ship traffic and air cargo traffic. But keep in mind that the relative scale difference, and then and if you're referring to the stoppage that was in the Suez Canal roughly about 2 years ago this time, in late March 2021, there was a ship that got stuck in the Suez Canal. It was I would say it was a very rather low contributory factor to the overall the deflection of container ship freight to air freight. The bigger deflection was the sheer uncertainty. And this is something we could run another ISTAT learning lab on this on the container ship sector, but unfortunately I don't have time to go into it today. People, this is kind of an aside, but it's a very good question before we get off the topic of container ship versus air. People have often asked me, what drives air cargo? Why do shippers use it? For one, it's very expensive relative to container ship freight. The difference in cost is roughly 14x long term. That is, air cargo is 14 times pre-COVID levels, higher in terms of a per kilo or per metric weight or per measure of weight, more expensive than container ship traffic. But people think, well, you need the speed. That's why air freight is often used by shippers. The answer is yes, maybe, but I think more importantly, it's reliability. So in pre-COVID times, basically container ships arrived on dock roughly about 80%, 85% of the time, according to data collected by a Denmark-based consultancy called Sea Intelligence. It fell to roughly in the low 30s during the worst of the supply chain disruption of 2021. as of January this year, it had only recovered to maybe a 55% on-dock reliability, on time, on by day. Compare that with the world freighter aircraft industry, which has on-time reliabilities measured in excess of 95%. So shippers, when they use air freight over container ship freight, are typically buying more reliability in their supply chain than they are speed, although speed is an added benefit. Hopefully that answers the question. If not, please repost again and I'll try to answer it towards the conclusion. So the freighter fleet is distributed across 3 different gauges, and each gauge is dominated by a handful of major types. So in the narrow gauges presently, 757s, then 737 classics, that is the 300s and 400s, and the 737 NGs. Believe it or not, at one time, the 727 freighter fleet numbered nearly 500 units, about 2000, 2001. We're now down to about 28. So I should point out to those of you who think of retirements as kind of an on-off switch in like a light in a bedroom. It really isn't. It basically, freighters phase out over time. If we look at the medium wide bodies, that particular volume is dominated by the 767, the A300, but pivoting back to actually the narrow bodies, we are all starting to also see increasing deliveries of A321 P2Fs, and more recently A330 P2Fs in the medium wide body space. Now, the large wide body space historically is led by the 747, but the 777 freighter fleet has more than tripled in size over the last several years. And then the MD-11 fleet, which once numbered almost 160 aircraft about 7, 8, 9, maybe 9 years ago now, is now down to about 103 in service units as of the end of last year. And this is kind of the wild card. So there are 226 freighters in service as of the end of last year, but the backlog is nearly 870 aircraft based on the intelligence of our firm in terms of gathering from different sources. And what we've tried to do in the freighter market outlook is map the delivery stream of that backlog over the next 5 years, from 2023 to 2027, by aircraft type, by gauge. We've also tried to build a rubric of understanding what drives retirements. Is it age? Is it lease expiries? Is it significant maintenance events? Is it was a mix of those 3, or is it all the above? And so we've provided our clients with basically a tool with which to analyze where is freighter capacity going over the next several years. Now we are starting to hear rumors. Not a big one, especially at ISTAT Americas earlier this month in San Diego, that a lot of lessors are finding it maybe more beneficial to repurpose older passenger lift for an onward renewal lease as a passenger aircraft rather than sending it to a conversion house, simply because the lease rates have strengthened because of quote unquote revenge travel. And maybe they're becoming a bit skittish because of what they're reading in the headlines about freight demand. The good news is I think there's room for all involved going forward. I have been asked by other clients, where was this backlog, say, pre-COVID? And by our best estimates, the backlog was somewhere maybe between 15 and 20% 3-4 years ago, relative to the active world fleet of freighters. So the backlog essentially doubled over the last 4 years, and that's quite telling. So that is going to put pressure on less efficient, inefficient capacity, and we've seen this before in this industry. Case in point, 747 classics, 100s, 200s, and a small handful of 747 300s, which were converted in the 1990s and early 2000s, once numbered in excess of 170 airplanes. By 2015, there were less than 25 in service. So it's been quite a drastic change just over that time frame. And of course, the fleet modernized with newer types. And we're going to see the same development in the coming 5 years. I mentioned to you that at the top of the presentation, apologies to Niels, I flew through this in about 35 minutes, but we're almost at the wrap-up time. I started my career on the 747 at Boeing in 1991, and I worked with several people that worked on the delivery of this airplane. The very first 747 cargo airplane ever built was delivered by Boeing to Lufthansa in March of 1972, and it entered service on the Frankfurt, New York sector in April of 1972. One curious thing about this particular airplane, on the main deck, it had only one main deck door, and that's the nose door you see open in this photograph. It did not have a side cargo door. Those only came later. So anyway, this is quite a historic artifact. So I thought I would begin my presentation with the last 747 cargo plane ever built and end with the first 747 cargo plane built. I do that because assuming Adam Pilarski is on the video today, I am a washout of the Adam Pilarski School of Stand-Up Comedy, so this is the best I could do in his stead. So to wrap up this morning or this afternoon or this evening, from wherever you may be viewing, air cargo traffic declined roughly 7-8% in 2023. That number will probably change as 2023, I should say it declined. I got the date wrong on that. It's 2022. Another typo I need to fix with you, Lauren and Niels, before we finalize the prezzo. That's a bad catch of me on my part. Hopefully people are still awake at this point, but we see a return to growth later this year and early next year. Much of the weakness has been centered mostly on routes tied to Europe, particularly intra-Europe and between Europe and Asia. The African and Indian markets offer incredible promise for the future, given the fact that so much of the world's workforce and working age force will reside there in the coming decades. Air cargo yields remain 50% higher than pre-COVID levels, but container ship pricing is already at or below pre-COVID levels. Even with the full restoration of passenger networks, we believe that freighters will continue to carry the majority of world air cargo traffic, and the backlog of freighters currently represents 40% of in-service units. But will all that capacity deliver? Check in with us if you need more details. And that's a gratuitous plug for our freighter market outlook. Niels, shall we go to Q&A verbally?
Yep, that's great. We had one more question that came in. What do you expect to happen to the 757 freighter over the next few years?
The older units, well, particularly the 535C powered Rolls units have already seen a pretty good culling over the last several years. That's not widely known, but a lot of those planes have already been withdrawn from service or retired, as far as we could tell from the data sources that we possess. There's very, very few left. So the newer equipment, it becomes much more of those aircraft up against a major maintenance event. Is traffic so weak that there's really little economic incentive to put in another heavy check and or putting in a whole new LLP stack in the engines? That's a hard question, and the asset owners, typically the lessors in that space, have to make that call. The express carriers where the fleets are wholly owned, that's a different equation, but they will be under pressure from newer, more efficient capacity like the 737-800 conversions and A321 passenger to freighter conversions that are offered by the various providers in the marketplace, because those airplanes are offering up some really intriguing possibilities in terms of their payload range capacities.
Right. Tom, you can stop sharing the screen as we can see more of you on the screen while we have a few more questions that have come in. The next question is on the MD-11 freighter. What do you think the future holds for that?
That's an interesting data point, because that's the three large wide-body freighter fleets types in service today. It arguably is one of the lesser efficient ones compared to the 747 and the 777. For what it does, there's only 3 operators, and already, I believe, earlier this year, UPS has announced that they're going to start retiring those aircraft. FedEx has already indicated that some of those airplanes are being parked. So I think we're starting to see some pressure on that particular type. It's really interesting because, again, that type peaked at about 160 in-service units, and it's already down more than a third as of the end of last year. So what will replace it? There's a lot of opportunity out there. I think there could be upgauging in the A330-300 because volumetric, that airplane starts to approach, but not quite meet what that airplane could do. It certainly can't do what the MD-11 could do in terms of payload and range capability. On the other hand, 777 passenger to freighter conversions offered by the three non-OEM passenger to freighter conversion providers that exist today. Congratulations, before I forget, anybody from II Medic on the call or the backers, so like AirCap, congratulations on your first flight late last week. The II 777-300ER conversion. That's the first of the three to fly. And so that's a big deal. And I think that airplane as well will provide an alternative to MD-11 capacity going forward, especially in express networks, express and e-commerce networks, to be more pointed.
On the topic of the 777, the freighter conversion, do you see that the certification would be smooth sailing, or could there be kind of a hangover from the issues with the MAX and maybe more scrutiny by the certification authorities?
I don't mean I all three of the engineering teams that work those particular passenger freighter conversion modifications have considerable experience and expertise. But yes, I think across the board, I think we're seeing, if you pick up any aviation new headline these days, I don't care if it's Speed News or Sirian or Flight Global, you name it, CH Aviation, to just name a few, Air Current. All you see is that certification is much more challenging now than it was 5 years ago, and I across the board. So that could be an impediment. I think time will only tell. I hesitate to comment any further in that area, but simply because you're pushing the bounds of my expertise.
Okay. So Camilo Giron has asked if you see any impact from sustainability pressure on the air cargo markets. Will that also accelerate the fleet replacement? That's a good point, Miller, because actually I was debating with my co-managing director, Frederick Horst, that we did not mention ESG anywhere in this deck. And that's my fault. I was pressuring hard. He said, don't bother, you've got enough content to share with the ISTAT Learning Lab. So, but absolutely. That will also, particularly I would say in terms of region of gravitas, I'd say operators based in Europe will especially say that, to a lesser extent North America, and then third East Asia. That would be in terms of where that concern would be manifest in a fleet upgrade renewal decision. I think less so in the developing world. Another question is, how much life do you think still remains in the A300 freighter?
For any Airbus folks on the line today, or anybody that's worked at Airbus, I have great respect for that airplane. Didn't have the legs that the 767 has. We all know that, but it was very good at what it does. It still is. And again, that type may come under pressure in some of the smaller charter type operators, but the express carrier fleets, I think that airplane is going to be around for some time to come because it's got a lot of life into it. For case in point, UPS in the last, I want to say 2.5 years, just finished putting in glass cockpits in all their A300, 600 freighters. So they'll probably want to maximize the utility of that investment for the next 15 years. That would be my guess. You'll have to talk to UPS to get their actual retirement schedule. The airplane's got a lot of life in it.
And how do you see the A330 fleet's conversion into freighters? Likely, or do you think some old aircraft will remain into service, waiting for deliveries of the A350 freighter and the 787 freighter?
Okay, so we're equating the A330 in the same realm as the A350? Because they're completely different tools in the shed, in my opinion. The A330 would be more of a regional express type operation service provider like the 767. That's its primary competitor. The A350 is more a competitor with the 777 and the 777-8F. And as Airbus has stated, it's also a replacement for the 747-400. At least that's what they're targeting. So those are completely different gauges and animals, in my opinion. I would say that 330 will be, we've already seen that EFW is delivering that airplane. And I believe about the past 18 months has announced that they will start delivering those to launch customer, I believe Avalon and ATS. Oh, I take that back. Avalon was a launch customer. I got to catch myself here. I believe those redeliveries are scheduled to recommence in 2025. But please check with IAI. I don't vouch to be an authority on all programs.
Okay. Tom, on converted freighters, there's a question here, how an investor or operator should look at a OEM conversion program versus a non-OEM conversion program.
Well, I have to be careful not to bite the hand that writes my pension check. So I'm a big fan of OEM conversion programs. They have their merit. There's a lot of value that they provide. But I think a lot of customers of said programs also realize that they may be able to get a better price from the non-OEM conversion providers. So it all depends on your evaluation criteria. Is that a good way of being mealy-mouthed and talking out about both sides of my mouth? I hope Adam is listening, because I really need a lot of coaching in this particular area. I have to be careful, but then again, in defense of Boeing, they've been very successful. EFW arguably is the equivalent of BGS in that regard, although it's a different business structure, I understand that. They have their merits, and having a tie to the OEM often facilitates, I would say, resolution of technical challenges in a much faster and expeditious manner, but you do pay for that.
The question was asked specifically for the narrow body aircraft, but I mean, would there be a difference between narrow bodies and wide bodies when you try to analyze the merits of OEM versus non-OEM conversions?
Can you repeat the question so I have time to think my answer out?
The person who asked the question was asking specifically for narrow body aircraft, right? If there was a difference between OEM and non-OEM conversion programs. But would you say that your answer, would you modify your answer if it's specifically for wide bodies versus narrow bodies, or?
No, I wouldn't change my answer for either gauge. No, okay. No, it's still, there's different ways to evaluate the offerings that are out there, and some have their pluses and some have their minuses, and it all depends on I would say the asset holder, and there may be other things that the OEMs may be willing to do elsewhere in a deal that allows them to pay more to the OEM than, say, assuming that the OEM is more expensive than the non-OEM provider. There's always different circumstances involved in the different aircraft deals that usually are not privy to the general public.
Yeah. Okay. Another question: do you see a risk of a bottleneck and the eruption of feedstock supply in the next 3 years once supply of next-gen aircraft returns to normal?
Given what we're seeing in terms of the recovery in passenger markets, I would say no. I'm not concerned about that at all.
Okay.
If that trend continues, I think we've, during COVID in 2020, there was a number of very rich people that put an op-ed piece in a major US-based publication, not an aviation publication, but they were arguing at that time that business travel was dead. That most meetings would be conducted like this platform, Zoom or WebEx or Microsoft Teams. And I'm a big fan of Scott Kirby of United Airlines when he said about 1.5 years ago, if you are a business person and your competitor goes out and talks to your customer and lands the deal, that's the last time you meet with that customer via a virtual meeting. I'll leave it at that. Okay.
Maybe a related question would be that as the belly capacity comes back into operation now, will that put pressure on cargo yields?
Absolutely. The restoration of capacity in any rubric of freight transportation puts pressure on rates overall. One of the major tenets that I left Boeing with earlier this year and late last year is that, and I'm still a big adherent to this, although I have lots of debates, including with my immediate co-managing director at Trade and Transport Group, is what's happening on the open ocean right now. So the container ship sector at one time in the mid-1990s, about 45 to 50% of container ship capacity on the open ocean was controlled by the top 10 players. That number now is somewhere between 80 and 90%. The consolidation of that market share on the open ocean only occurred in maybe the 2016 to 2018 timeframe. It was very quiet, very nuanced. But do I see that these really low container rates staying in place, especially as the world economy recovers from the inflationary period, the uncertainty of the Russia-Ukraine war? The answer is no. I expect prices to head back north of $2,000 per 40-foot box, maybe pushing $3,000 per unit. If that happens, that makes air cargo that much more attractive and should keep air cargo rates elevated above pre-COVID levels. And that should be a good news story for anybody that's an asset trader in the freighter market space long term. We'll see though. Is there overcapacity in freighters coming today? Depends on who you ask and on what gauge they're playing.
Tom, there isn't any nose loaders in production anymore, and there may be a while before there's another one coming out.
Yeah.
What are the implications of that for the market?
Well, we have to remind ourselves that the outside that feature is principally used for outsized carriage. That is any object that is roughly 6 meters or 20 foot in length or longer. I worked with a number of customers at my former employer trying to ascertain value. In fact, I had several customers say, "Oh, we never opened the nose door." And it was funny how I would go on airport tours and I would see all their nose doors open. So the interesting thing long term is that I'd say that feature is a very unique industrial tool. The quid pro quo though is that the operator of the asset, the airline that operates it, has to have a very skilled team of experts in selling that feature, as well as an engineering team that knows how to handle the irregular sized loads that go in and out of the aircraft. So it's a very small niche industry. I would say it's probably less than 2% of tonnage in plane worldwide. Arguably, it might even be half of that number. But it is very lucrative for those operators that pursue it. And the interesting thing is, I think, is that there's sufficient 747 capacity to serve it for the remainder of my working career, and probably at least another decade or two beyond. What we will probably see is that 747-400s and those 747-8 freighters that delivered over the last 12, 13 years will remain in service, I would say, arguably through at least year 2050. Will they operate at utilization rates in excess of 10, 12, 14 hours during that time frame? Probably not, because they don't need to. The assets will be paid for, and basically their only real operating cost is their operating cost. The capital cost will be fairly de minimis.
Another question that just came in is about your feelings about the 737 Classic Freighter. When will they be phased out, you think?
I will argue that if 737 NG capacity delivers like we are forecasting in our freighter market outlook over the next 5 years, that will put pressure on the least efficient capacity. So that will take out older 757s, the last of the 72s in the developing world. The surviving BA 146s, yes, there are still a very, very small handful out there. But in the 737 Classic realm, it'll be the 300s to go first, and probably when they come up against a major maintenance event or a lease expiry. Oh, and another gratuitous selling point, we do have a forecast of those ships coming up for those types of events in our document.
All right. Tom, now, do you see maybe a little longer term that there could be a softening of the air cargo market due to a tendency maybe to bring production home 3D printing and all kinds of tension between the various blocks around the globe?
I hope some of my former colleagues are still on the line, because we received no shortage of term paper assignments on that very topic, Niels, over the last, I would say, at least 2 decades, and maybe going back further. I think, and I gave this speech at ISTAT Americas a few weeks ago when I spoke on the cargo panel, is that one needs to keep in mind that supply chains are always on the move. To say that they, for example, over the last 20, 25 years, a lot of the world's manufacturing capacity has moved to the People's Republic of China. Will it stay there? I think we're seeing now, the answer now is no, not necessarily. We're seeing offshoring to places like Vietnam. We're seeing offshoring to places like India. Is there a potential that those chains, once established, could keep moving elsewhere? Absolutely. And therefore, it will become, to serve those manufacturing sites, you need ample container ship capacity, which in certain developing world markets just isn't necessarily there, and it takes time to develop. So that's a good news story for air cargo longer term. I'm not worried about nearshoring of certain, well, 3D printing move stuff around. Yes, yeah, that will bring certain manufacturing capacity back to markets that probably have high labor costs, let's say Europe or North America. But where will the components that run those printers come from is the next question. So it's, supply chains are always on the move.
All right. Well, Tom, thank you so much. There are no more questions from the audience. This was very interesting. And please look out for other learning labs coming up. Visit the istat.org website, and we will have more of these events. Thank you, Tom, so much.
Niels, thank you. Good to see you again after all these decades.
Yes, same here. Bye.